I would now like to review bonus depreciation with you. For assets acquired after September 27th, 2017, they instituted bonus depreciation, which allows you to immediately expense 100% of assets acquired. Now, what you have to understand is the percentage is 100% and will be the 100% will be eliminated on December 31st, 2022, and then there'll be a phase out period. Bonus depreciation will be the primary way to depreciate your qualified assets for most businesses. Businesses must elect out of bonus depreciation, and it's an annual election. So the assumption is businesses will use bonus depreciation. If you do not want to use bonus depreciation, you can opt out of the bonus depreciation, but you have to do it by class of assets. When I say class of assets, you can actually elect out a bonus depreciation for 5-year class property, but still use it for 7-year class property. The election is based on an entire class. So if you opt out of the 5-year depreciation for bonus depreciation, you can't expense any asset purchased in the current year that qualify for the 5-year depreciation of modified acres. However, you still can use other classes like the 7-year class or the 10-year class. This is an annual option to elect out of it. Now, when we were studying Section 179, I pointed out to you that you could choose any asset. It didn't have to be all of 7-year asset. It could be 7-year asset, 1 7-year asset, 1 5-year asset. This is not the case in the bonus depreciation. And the property must be new or used as long as it was not previously used by the taxpayer. This is the same rule as in Section 179. The other thing that is considered a reason to elect out of bonus depreciation, which is an annual election, it's a form you file with the tax return, is company may not want to create a large net operating loss for the business, because in taking that net operating loss, it could take you a couple years to recover. Because when you have an NOL in a current year, you can carry it forward. Starting in 2018, you could only carry it forward. Prior to 2018, you could carry it back 2 years and then forward. However, under 2018, you could only go forward. There was a change in this rule because of the pandemic, where you could, for pandemic years, you could, for 2020, you could carry back your NOL incurred in 2020 because of the pandemic. So rules will change based on changes beyond the control of the tax code. They actually want to give people the opportunity to carry it back, because when you carry it back, you could get a refund. I now would like to review with you 63A and B in your textbook. Assume that Savard Corporation has 2020 taxable income of $1,750,000 for purpose of computing the Section 179 expense, and acquired several assets during the year. Assume the delivery truck does not qualify for bonus depreciation. And the reason they're telling us is that delivery truck is used, and it was used previously by the taxpayer. So in this case, we cannot use bonus depreciation on the delivery truck. They're telling us that. What is the maximum amount of Section 179 expense Savart may take or deduct in 2020? Well, his taxable income is $1,750,000. The actual qualified assets for Section 179 is $1,913,000, which is below the $2,590,000 of qualified assets. And also, the depreciation Section 179 allowed is $1,040,000, and by looking at the taxable income, the Section 179 does not create a loss for the based on the taxable income. So they're going to choose first the asset with the lowest cost recovery. So when we look at that, the machinery has a 7-year recovery. The computer has a 5-year recovery, and so does the delivery truck. Well, the first thing we're going to take is the delivery truck, in this case, because it was priorly used by the taxpayer of this business, so we cannot use it for bonus depreciation, but we can use it for Section 179. And they told us this. They specifically told us that it's used. Okay, and the fact that they said does not qualify for bonus depreciation, it is because it was used by the taxpayer in this scenario. So we're going to take the $93,000, and then we have the next one we're going to take is the 7-year property, because it has the lowest cost recovery compared to the computer equipment. And we use the delivery truck for Section 179. So if of the $1,040,000, if we use $93,000 for Section 179, the remainder amount for Section 179 is $947,000. So we can take full advantage of Section 179 for $1,040,000. Now, the remaining balance for machinery, we can use bonus depreciation and take it at 100%. The computer equipment, we can take bonus depreciation and depreciate the full amount, $70,000. And for furniture, we have $310,000, and we can take the full amount. So the Section 179 expense is $1,040,000. And the bonus depreciation is $893,000. So the total amount we can take is $1,913,000.